checking on the file just to verify, as suspected, there's been absolutely no reconciliation done at all, which guarantees, again, that there's going to be a wide variety of accounting issues before you can, correct the tax return. Yep. See, reconcile. Maybe later. That's the box to check. If you haven't been engaged to do that, right? How long would it take you to reconcile all the bank accounts and credit cards, right? If there's like 5 accounts, that could, be costing the client, say, $5,000 or $4,000. So if the client's not going to pay that, and you're not engaged to do that, it really doesn't make sense. And so that's when that cost benefit principle starts to come in, right? Is what's the cost of providing completely accurate financial information, and that should not outweigh the benefit of that information to the user. So a lot of times you're in a situation where you're measuring, right? Like, this is really how I know it should be done. And I know that there's like issues that this should be done this way, but this client really is not going to pay for this, and it's not really, it's hard to kind of make the math work, so to speak, as far as your time, that kind of thing. So you are kind of making some judgment calls as you go through these client situations about, how deep to get into this stuff, right? And how to balance the quality of your work, which you want to be excellent, right? With the fact of that, we're all sort of doing what we can from where we're at, right? And as small business people, we're trying to make it work, so depending what what kind of business you want to have, you're going to have to make a variety of judgments of how to handle situations where things are not done correctly. And so what are we going to do about it? And so the cost benefit principle is definitely something to keep in mind on that note.